Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Tesla's conference calls are always interesting, but in this case, in the second quarter of 2023, there were three massive takeaways that I took away from the call. That's what I want to dig into today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing. I got a link to that in the show notes. I want to start with the most shocking one because this has gotten a lot of attention because other automakers adopting the North American charging standard, or Tesla's charging standard, has gotten a ton of attention over the past few months. Seems to be something that should add a lot of value to Tesla, but Musk basically said that that was not the case. This is the quote from the earnings call, and this was in context to licensing FSD. He was trying to say that that could be a big business long term, but what he said is, this is important to Tesla, just as with the case with North American charging standard, although in that case, we're not licensing it, we're just making it available. Now, that seems a bit like a throwaway line. We're not licensing it, we're just making it available. But what that means is that if you're not licensing that standard, that means you're not making money off that standard. Now we know that Tesla could make money off of the charging on the superchargers that it's allowing access to from other automakers. But it appears that the standard, the plug that is going to go into each of those vehicles, is not going to be something that they're going to make money on. This is, I think, a really important revelation because getting to the North American charging standard being the standard now, and NACS becoming the standard for charging in North America, I think is an incremental positive for Tesla. It means that they're not going to be off on their own charging standard, just like other companies aren't going to be on their own. So it's kind of a good thing for everybody's working together. But it is really notable that Tesla, it doesn't appear that they're going to be making money off of being that standard. I think that's something that a lot of investors and a lot of commentators have probably gotten wrong in the last couple of months. Another shocker was that Musk himself said that FSD is not as safe as a human driver. I'm going to read the quote right here. Now, I'm the boy who cried FSD, but I think we'll be better than a human by the end of this year. If they're going to be as safe as a human by the end of this year, that means that right now, FSD is not as safe as a human. That flies in the face of all of the statistics that are all of the very flawed statistics and charts that Tesla has released over the years saying how safe FSD is. He said it right there. FSD is not as safe as a human driver today. I think that is extremely notable, especially when we have other self-driving technologies on the road today with no human driver watching over them that are far safer, have fewer accidents per million miles. Now, if you're familiar with Tesla's history, Musk saying that something is going to be done by the end of this year means it probably won't be done in next year or maybe even the year after. So FSD is not as safe as a human driver today. And I have questions about it if it ever will be, but it certainly doesn't appear that it's going to be by the end of this year because Musk rarely lives up to those comments. And the final thing is that Tesla is going to actually cut production in the third quarter of 2023. They said this was for plant upgrades, but I think this is part of Tesla trying to manage their inventory. Inventory has been building over the last 4 or 5 quarters, and we have seen recent reports just in the last few weeks that inventory continues to build in Q3. Management said, we expect that Q3 production will be a little bit down because we've got summer shutdowns for a lot of factory upgrades. So just probably a slight decrease in production for Q3. The implication there would be that Tesla is actually going to ramp up production in Q4 and then clearly more ramping in 2024. But this has always been a growth story, and right now it's becoming more of a margin story. I have covered that multiple times on this channel. Margins are coming down really rapidly. One way to stem that is to reduce the supply going into the market. Tesla seems to be doing that in Q3. So if margins don't get better in Q3 when production is going down, that is a terrible sign for the company. So 3 really shocking things that I took away from Tesla's earnings call that I think all investors should keep in mind. The NACS standard is not going to be a moneymaker for Tesla. FSD is not as safe as a human driver today. And Tesla is going to be cutting production in the third quarter. What do you think of the quarter and those comments? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.